May I remind you that trading is risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to QuantBox Daily. Today's Tuesday, October 18th. How you doing? Welcome. Alrighty then. So let's take a look through our QuantBox fundamental bias. A couple of things coming up on the charts today, which I think are going to be quite interesting, where we might be able to exercise our fundamental bias. Euro dollar, we're still bearish. Okay, not much change. Taking a look at news today, we got some Euro news coming out of Europe today. Let's have a look and see if there's anything United States wise. We got some medium news later on from the States. Some more medium news and some more Euro stuff. And then some more medium stuff. So there's a bit of news later on today. Cool. We will be prepared. But overall, not much change to our fundamental bias. Pound dollar. Also still bearish. Got some pound news today. Couple of hours. And then States news. Cool. USDCAD. USDCAD still a buy. We got some CAD news coming up later. Medium to low. Aussie USD. Still a sell. And just no, it doesn't look like any Aussie data later, although the Aussie session is behind us and the next Aussie session is way ahead of us, so shouldn't have any news affecting us. Nope, we're all good. And then Kiwi dollar, we were neutral yesterday. We're still neutral, so we're going to leave that alone. We're going to keep an eye on it though, because if there's a change, we're interested. Aussie yen, so Aussie yen bearish yesterday. You can see, oh, we've jumped into neutral territory, so we leave that alone. CAD yen, still neutral. Euro yen, still neutral. Pound yen, neutral. Kiwi yen, neutral. So then we leave the yen pairs alone today. So basically the only pairs we're looking at trading today would be our Euro, Pound, CAD, and Aussie. Just double check Aussie again. Yes, everything else remains the same. So Kiwi dollar still neutral. So let's have a look and see. Starting with the Aussie USD. All right, so yesterday we spoke about this. I said to you, wouldn't it be nice to get a pullback up to some kind of resistance so we can sell this and take it lower down? And I also said that the only type, this was last week and yesterday, of course, the only type of counter trend trading that Wayne does is when price opens below the S2 or above the R2 and then takes it up or down to the central. So if you took a scalp at Asia Sunday up to the central, boom, boom, you made some cash. I wouldn't take any further than that. It's just a simple trade. You're just sort of getting that free money up into the central pivot point. You didn't do any selling yesterday. Why? Because I said to you, make sure you get that lower low, lower high on the lower time frames. Do you see lower lows and lower highs? I do not. So if you sold this yesterday, that means your tactics are not okay at the moment. All right. You should be waiting for lower lows and lower highs to indicate bearishness. You can see you didn't get any. Okay. You might have considered this a lower high, but then you weren't paying attention to the fact that price is breaking resistance and resistance is becoming support. One of the key indicators that something is not bearish, right? Cool. So looking at this currently, are you currently at resistance? Well, yes, technically you are. I mean, it's very rangy. Okay. You can see here, we got top of the range over here. Okay. So it is very rangy right now, consolidating. So you definitely are closer to the top of the range than you are from the bottom of the range. And so what you could be doing right now is you could be paying attention to a lower time frame and saying, okay, what have I got? DR1, DS1. Okay, cool. What else have I got? I've got a weekly R1 to a weekly S1. Okay. Although the range certainly looks like it's more of a R1 to M2. Okay, so be aware of that. Remember, plan your trades not only in terms of entry, but in terms of exit as well. Ultimately, you're looking at the H1 chart. I don't see lower low, lower high here. Okay, cool. M15, lower low, lower high, easier spot. You can see right now we don't have one. M5, we don't have one. Okay, so keep an eye on that. You just simply, like, you can see how this over here formed a higher high, higher low for the buy. higher high, higher low, higher high, higher low, higher high, higher low. All you're looking for is a lower low, lower high, lower low, lower high, lower low, lower high. Not difficult, just requires control, patience, and discipline. Now, that's the Aussie USD. Cool, cool. And what's nice is that you can exercise your bias. Why? Because you're bearish and you are currently closer to the top of the range. If you don't get the lower low, lower high, what do? You do nothing. What does that mean? You don't sell. And then, well, you don't lose money on selling when something isn't bearish. Stay sharp, friends. Euro dollar. Okay. Currently coming up. Beautiful, no problem. I still said to you guys, like, I don't like the 21 EMA. Price made a higher low. Okay, yeah. So we look at the H4 time frame. We're currently at a profit-taking zone on a Tuesday. So we know that if price is at a profit-taking zone on a Tuesday, we're going to be down to the central by the Thursday. What's nice about this is that it's not a counter-trend trade because currently fundamental bias is bearish. So we would now be exercising our bias. It's almost like this is bears taking profit to get up here. Sorry, bears taking profit to get up here so that we can then enter further sells, right? That's our plan. That's our strategy. Can we exercise it? Very easy to find out if that's possible. Look at how we currently are sitting at this role reversal. Okay. And we're at a profit-taking zone. Beautiful. You should be looking at this and saying, okay, I'm ready to take this down. And it's very simple from here on out. All you're simply doing is you're lining up your H1, you're looking at your M15, and you're saying, give me that lower low, lower high. Do you have it right now? Well, you can see that there's a range over here. Price broke out of that range. Price came up. Price closed at this resistance over here. Okay, bottom of the range. So you have got price breaking support, support becoming resistance. What you could do is you could go into M5 and you could say, okay, well, you might be comfortable with that. You might not be comfortable with that. You might just want to wait for price to 21.55 to cross, wait for price to fall down, pull back to 21, take the trade like that. Totally up to you. Just recognize the fact that you are fundamentally a bear and you are currently at resistance. So use your tactics to confirm bearishness, take the trade, and make sure you know where you're getting out. All right. So ultimately, targets, we're saying targets would be the profit-taking zone to the central. Okay. You could either take profit down there automatically by placing your take profit level down there, or alternatively, as price gets closer to that, you could pay attention to it and see if we bounce off of there, looking for bullishness. Alternatively, taking all the way down to the bottom of the range, because you can see here, if we treat this like a range, you've basically got that over there. It's up to you in terms of how you want to do that. But just have an idea of what you're going to do and how you're going to measure that as you're trading that trade, right? A plan isn't just about how to get in, it's about how to get out as well. Right? That's holistic trading, right? Cool. Okay, pound dollar. What do we got? All right, so we currently at a weekly R1. Cool, that is resistance. Weekly R1, weekly S1. I can see support down there. Cool, cool, cool. And I've got any roll reversals over here? No, we don't. Okay, cool. But we certainly have stopped. Okay. And you then look at the H1 and you say, okay, what have I got? All right, M15, have I got a low, lower high? Not yet. M5, lower, low, lower high? Not yet. Okay, so you're just waiting for that lower, low, lower high, get the roll reversal, take it down. If you don't get it, you don't sell it, and then you don't lose money. Yay. But you are currently a bear and you are currently at resistance. Again, you want to pay attention to when you're getting out because you recognize volatility ain't that great. And so it might be a day trade, it might be a scalp, it might be something you run to the end of the week. You're gonna have to pay attention to that and make sure that you're in the trade as long as it remains bearish, okay? Or just take profit at a level like the daily M1 when you got a confluence with the weekly pivot point, which is, I mean, R1, S1, fair enough, but you got a daily M3 to daily M1, okay, cool, right? Nothing wrong with that. Then we've got the Kiwi dollar, we're leaving alone. USDCAD. Well, we happen to be just above a profit-taking zone. I don't see any support over here. Bottom of range stuff, no roll reversals. Okay. We have got this moving average over here. If you're using that as dynamic support, no problem. don't see why you shouldn't. Just make sure you verify the trade, look at your lower time frame chart and say, do I have a higher high, higher low? And if you do, then you take. If you don't, then you don't. Simple as that, guys. Really, really easy. And just takes a bit of patience, bit of control, bit of discipline, and you'll be surprised as to how it suddenly changes your trading results overnight. In terms of the rest of the pairs, we've got neutrality on Kiwi dollar, neutrality on all the yen pairs. We're going to leave those alone until such time as you've got a fundamental bias. I think right now, in terms of the Aussie and of the euro and of the pound, there's enough to go on. So what can you do? Well, create a watch list. Go to your watch list and say, right, I want a watch list, and my watch list will be, let's just get rid of these charts. I need a euro dollar, an H4 and an H1 should be fine. Pound dollar H4, H1, and give me Aussie USD H4 and H1. Then just sort your charts. You can see euro dollar over here, pop that onto the H4, give it the correct template, pop this into the H1, give it the correct template. Same thing with the pound dollar, give it the correct templates. And then the Aussie, giving that the correct template as well. Okay, cool. So what do you got now? Well, beautiful stuff. As you can see, we're looking at this, we're looking at this. And so we're paying attention to, maybe you not on the M15, maybe you're looking at the, sorry, H1, maybe on the M15, maybe the M5. Okay, you can jump through those as you see fit. Pound dollar H4, right? All you're simply doing on the H4 is you say like, well, am I broken that level? Am I still at that level? Like, what's going on, right? Cool. You might even extend that line to the wick of this candle. Let's get the high in there. So high of 98665. 98665. And you can go into an H1 time frame and say, right, in the market open, which is like what, a couple of minutes, half an hour, you know, has this become bullish, i.e. has price broken this line, has price closed at support, has price broken resistance, has resistance become support, right? And that's, you could totally trade it like that, or you could be on the oh snap, or you could be on the M5, M15 and saying, right, do I have price closing a resistance? Now, one thing you'll be paying attention to is saying, right, so price broke out of this range, came down, pulled back up. What I want to see is that these candles down here close at any kind of support. You got that support over there. So you got price coming down to support, price coming up to resistance. And if this ranges and closes at the top of the range, well, that's resistance. Closes at the bottom of the range, well, that's support. So ultimately, you know, what denotes bearishness? You could, of course, again, wait for the 21.55 to cross, wait for price to come down, pull back to 21 and take that trade there. There's many ways you could do this. You could wait for a lower low and then flip the lower high. Okay. Just recognize that you have got a plan, you've got a strategy, and you're following it correctly. Okay. Groovy. Same thing on pound dollar. So you could either be looking at the H4 time frame over here, or you could be looking at the H1 time frame. All right. And then on here, M15. No lower low yet. M5, no lower low yet. So you could be waiting for price to come down, pull back, roll, whistle, down. Okay. If there is no bearishness, you won't get the lower low, you won't get the lower high, and you won't sell. And that means you won't lose, right? Same with Aussie USD, H1, we can just look at that. So you got the H4, 55, top of the range. Okay, cool. H1, is this bullish at the market open? If it is, you stay away. If it's bearish, then just go to a lower time frame chart and say, okay, cool. Have I got the lower low, lower high? Have I got the lower low, lower high, right? So keep the watch list open, pay attention to what you're doing, know exactly what your plan is, know when you're getting in, know how you're getting out and where you're getting out, and then stick to your plan. And let's see how we develop on these three trades, right? If you've been patient up until now, you haven't lost any of your capital. You've done that because you've waited for opportunities like these. And if these turn out to not be opportunities, then again, you're not going to trade them because you will verify them using solid tactics, right? Strategy, I want to sell euro dollar. Strategy, I want to sell euro dollar at resistance. Tactics, I want to confirm bearishness at the time of selling. Boom. All right, guys, I wish you the best of luck. Have a nice day. Don't forget, tonight is the weekly Stop, Look and Correct session. I hope to see you there at FX Bootcamp. Have an amazing day. Stay safe, stay controlled, stay disciplined, and stay patient. All good things come to those who wait.